For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're talking about focusing on trade setups. So I've received emails and questions, and a lot of great questions, really quality questions, and then I've received other emails asking me about incorporating other time frames, incorporating other types of analysis, and all these things. And I'm, I don't know how much clearer I can say it. Cut the crap and focus on setups. I know there's other gurus out there talking about all these things, and here's the thing. You can make it as simple and complicated as you want. I literally am looking for stuff that matches a setup. I focus on gold and oil indexes in the U.S. session, but I'm following the 6 major pairs always because day 1, day 2, day 3, we're going to have high of the day shorting opportunities. We're going to have low of the day buying opportunities. We're going to have trend trades. We saw examples of all of these yesterday. And it's not about guessing a direction. It's about having a setup, because understanding that, like one of the comments, interesting, different perspectives. You can trade however you want, as I've always said, whatever makes money for you. But I'm not trying to get the direction right. I'm looking for scalable setups that I can put size into. And that's the type of trade where people are caught and they're going to rifle in the other direction, not get the direction right and hopefully make some pips. I want to know where can I have a scalable setup that I can put size into, because when they go in the other direction, or when they go in that trade's direction, there's a reason why they're not coming back. Until that penny drops for you, you're going to still be trying to take trades and get the direction right. I'm looking for trades where they have people trapped and they're going to rifle it in the other direction. And that's where you can put size into, because it moves like a bullet and it's not coming back. And then I lock in the money and I get out, because I know that that's mission completed. Lock it in and get off the screen. There are certain ones that are going to be larger moves, high of the week to low of the week, low of the week, high of the week, trend days. Okay, we saw a great example on the M. We'll look at that. There are some simple things no matter what session you're trading. The market drops 3 levels to the previous day's low, goes 25 pips and pulls back into the previous day's low. The low is essentially the quarter level. The low was put in that Europe session, but the low, okay, the trap volume is above 50. They go down in the U.S. session, 25 pips, trigger breakout traders at the previous day's low and pull back right away. Do you understand what they did there? They trigger breakout traders. Then they go back down into the longs and get longs stopped out that didn't take the money, that were up 50 pips. They come back and get them, and then they consolidate the volume above 50 into the new day. Do you notice there's a consolidation there? So people say, what about aligning the 1 hour and the 30 minute and using volume analysis? Why? Why do I want to add more? I'm not looking to add more. I'm looking for setups. Consolidation, trigger shorts, expand the range, trade back into where? 50. We work from 50s and double zeros. If you're not a 50 or double zero, you need to be thinking trap volume. The quarter level. They go up how many levels? 1, 2, 3 levels into the previous day's high of London session. I talk about 3 session setups. 3 session setups. London, US, Asia for a vertical move at the end of the Asian 12 candle window into the beginning of the next session, where? At the high of the day. At round numbers, 25 pips above the range for a 75 pip move down through the low of the day and through the longs, 25 pips into the longs at the end of the Asian session. The important thing is to, again, have an idea of what you're looking for. So instead of just focusing on, gain direction and bias and all those things. My main objective is looking for setups. So I talk about, high of the day, low of the day opportunities, and the three things that markets do. Obviously, they trend, they break out, they pull back, they trend, they break out, they fail, and they reverse, or they stay in a trading range. So first hour will often make a either new low or new high, or a high and a low within a range. Now the thing is, there's going to be different variations of this. We see again the breakdown, and then an equity market open and a work back up into the high for a move down. Okay, that's one setup, and it may be one variation of that. It could be 3 levels of rise for a move down. These are just shorting examples. We can get a vertical move in the first hour that locks the high in and breaks down. Half Batman, the all-day fade, those sorts of scenarios. This can happen in Asia, it can be in London, it can be in New York. Or we can have a market that comes down and makes a low, and then the equity markets come back down into the low for a move up. So all the other things in my mind are not that important. Volume analysis, order flow, all these things. I see the whole day becoming order flow when we have a consolidation in numbers. So I talk about 3 levels. So that would be, in most cases, 75 pips. On an average instrument, 3 levels would be 3 25 pip boxes for 75 pip high-low. So we'll often see sometimes they'll come out of the US and they'll be in a consolidation in the middle. As we saw in gold yesterday, they go back up for a move down. We can see boxes that are 150 because we have 3 levels of 50, and that might be oil, gold, indexes, and again the same principles. We can see an Asian session, a London session, and a New York session for a move down. And the same principles apply for a long position for a move up, and that may be again 75. 3 levels drop from maybe a US session into Asia, into the Europe-London window, and then a gap move, and then a US session continuation back up. Those types of scenarios. So again, you can look at all these things and be looking at, different multiple time frame analysis. I look for Monday, Tuesday, Wednesday, day 1, day 2, day 3 patterns. I'll use the other patterns to where we're making those new highs, and possibly a Thursday, Friday setup. And there's obviously different scenarios. But the point is this. Once you have your thesis of the type of setup, the next thing then, as I keep talking about, is the price level. So we can, I'll get rid of that. We can be chasing stuff and where do I get in? Where do I get in? Where do I get in? Because it's going all over. I look at that and I say, this is trapped volume now. So trapped volume means that the volume all up top here is trapped. And the next likely target is if that volume is trapped, is that they're going to go down. They've got volume caught up high, whether that's London, US, Asia, could be a day, it could be a week, it could be 3 weeks of rise. We could have week 1, week 2, week 3, into a Thursday, Friday, and then the Monday can blow off. So when you understand the concepts of the timing and the setups, the rest of this starts to come together. The next thing to understand is that when you're trading a session, so whether you're trading Asia, London, New York, Now we're looking at oil. Oil I like to look at in the New York session. The next thing I'm looking at is, do we have a high or a low in place already? And if we do, what is the level? We have a peak formation above 50 in the Europe Open. We have a peak formation that goes down to double zeros below the quarter level. What that is that's the peak formation. So we've gone down and the market has reversed and put a low in place. So my peak formation is under the quarter level. What that tells me is that if this market was to give me a buy low, we may see something at that level. I have no idea until the timing kicks in. When the first hour trades, we have a lower high in the gap in the London session. That becomes my new high of the day. The first hour makes a high and a low. The second hour opens up with a bear pin hammer. We have our low of the day down at the quarter level. We have our high of the London window up at the 50 cents level, which is a 150 pip box. When the equity market opens, we are up high. We are up high right here on this little bear pin hammer on a third push just above double zeros. There was a short opportunity at the beginning of the session for a 50 pip move down towards the low of the session. Second hour. Now, I've talked about the ramped volume. When ramping price action heads into the high of the day in our timing window, this is a pattern for a fast, explosive vertical move back through people chasing that long trade. We get our 1 push, 2 push, 3 push, and a short trade down into the low of the day. We established that this level could potentially be our low of the day range. The New York equity market opens, engulfs on a third push, and explodes vertically back towards the low of the day. 1 minute into the U.S. session, 2 minutes into the U.S. equity session. 3 pushes down. And then we get an engulfment at the low of the day off of 50, the level that we established, this is West Texas by the way, as a potential area for our low of the day level. We get an engulfment and a reversal that consolidates sideways at the double zeros inside of the high of the day for a trend trade back up through the high of the day. High of session to low of day, back through towards the high of the day. So again, the gibberish and the indecision on my part only got clearer when I recognized the same consistent behaviors in every session. We can look at the Japanese yen. I talked about the new month is a potential time frame for new changes on our daily charts for monthly reversals. So again, we had a peak formation low the 1st of August, peak formation high the 2nd week of August. The market pulled back inside, put in a peak formation low. We had a first green day and a reversal closing out the previous week. When we come into our new week, we have a peak formation low and a peak formation high inside the high and low of the month. Now I talk about the highs and lows of months and weeks and days being the targets, and traders have asked, what do you mean by the target? Well, that's where the money is. The market then proceeds to come 3 pushes from the high of Friday. So again, Monday, Tuesday, 80% of the time forms our initial balance. One of those extremes will tend to hold by the end of the week. Monday puts in a peak formation low. U.S. session puts in our peak formation low, 2 pushes down, a third push in Asia. And again, you'll notice locking in the double zeros potentially now as the low of the day and possibly the week. Pulls back and goes into consolidation into the Europe-London window at 50 for the explosive breakout through the high of Friday. Day 1 longs. are in the market. Day one longs are in the market. They pull back into that breakout from the high of Friday. So we have Monday, Tuesday, day one, day two, day three, but we have day one longs. Longs are in the market. Where possibly are we heading? First place is the high of the previous Wednesday. They take out the high of the day for a high of the day sell for later session North American or Northern Hemisphere traders. Point being, the timings, the setups, and the levels are in every session on any instrument. And then understanding, am I in a trend trade? Am I in a reversal trade? Or am I in just a trading range? And then knowing, am I up high? Am I down low for this session? Am I looking at a sell high setup, a buy low setup, or a continuation trade? And that's it. Levels, timings, stop loss. You can look at any instrument, go back through your pairs. You can use it on indexes. Every instrument's the same. There's only two things, price and time. That is it. That is the only two things on the chart. So even if you're using indicators, those are mathematical derivatives of price. And in some cases, price and time, depending on the type of indicator. But that's all it is. So whatever you think you see with the indicator, if it works for you in terms of confirmation bias or any of those other things, it doesn't matter as long as it makes you money. But coming back to just focusing on setups, all the market is doing is trading from high to low. We have a consolidation heading into the new day that reflects levels on the chart. They break out in the Asian session. They lock in the high. They clear out the previous shorts from the London on Tuesday. Sell high setup in Europe London window. Sell high setup in the US session. Pull it back. Work it back into the low of the day, low of the week. Working down low. 25 potentially may be a level of buying if this market is going to be possibly reversing. Don't know. Can't tell until the timings. I know they've got a 50 pip box between 75 and 25, and we're currently in consolidation inside of that range. Keep it simple, traders. For me, my mantra is cut the crap, focus on setups, timings, only the highest probability opportunities. And I peeled my onion so far back that if I don't see a textbook setup, I will not trade. I will not trade, and I know people hate it when I say that, but it's the truth. You need to get so clear on what it is that you're trading that you're not just trying to catch a move or get lucky or get the direction right. I'm looking for very specific setups. When I'm outside, when I'm up high or down low, that is the greatest point for my potential entry and my least amount of risk in terms of asymmetrical risk reward. So if I don't see that, I don't try to guess and just get in to catch a move. I'm not interested. I want textbook trade setups. When the market goes up 3 levels in a broken down market in the first hour and gives me a price high at a quarter level where we are 3 levels above the low of the day, that gives me the opportunity for a 50 pip fast explosive move if the setup happens. They lock in the high, and what do? They march back up into the high right at the timing window, right at the equity market open, for an opportunity to enter the market short, a 1-bar stop, and a 50 pip profit target. Lock and load, take the money, and get off the screen. Keep it simple, traders. Have a great day. Appreciate all the questions and feedback. I'm in transition, juggling residences and flying out Monday. So have a great week. Keep it simple. Lock in the money. Go enjoy your day and have a great session. May the markets go with you.